So basically, if you've been following the stock market or if you're invested in it and you've been watching your money simply evaporate within the last, I'll say 2 weeks, I think you've probably come to the same conclusion that I've come to. Well, first of all, I've been making these videos since I would say, I've been making them for years, but the thing about it is I only increased the frequency of my making these videos this year after I saw what coronavirus had did to the market, because what I sensed was a buying opportunity. So to narrate in short what ultimately happened with this market since, I'll say, March 18th, is that basically coronavirus scared everybody out of the market. Everybody pulled their money out of the market. Once they pulled their money out of the market, they realized they weren't going to get anything from the banks because the Federal Reserve has basically, I don't even know what a better word to use is. They've basically dropped interest rates to zero, and they have no intention of bringing interest rates back up for a long time to come. And by a long time to come, I mean probably 2024. They're saying that they have no intention of raising interest rates until about 2024. Now, Trump has always criticized the Federal Reserve about having higher interest rates because about 2 years ago when I bought my second house, even the prime rate on a 30-year fixed mortgage was 4.7. Right now, it's lower than 3 if you're purchasing. I think it's slightly higher than 3 if you're doing a refinance. So ultimately, what he wanted was 0% interest rates in order to trick people into going out and spending their money, because the more money you spend, the more it props up the Dow Jones, and the more it looks like his presidency is anything other than a bitter failure. The Dow Jones does not represent what is going on Main Street. It only represents what's going on Wall Street. Right now, the average person is worried about whether or not they'll even have a job a week from now. The average person is worried about their rent, whether or not they'll be able to pay it. They're worried about whether or not their tenants will be able to pay them so that they can pay the bank. And the banks are worried about whether or not they'll be paid, which means that even the banks have seen a massive decrease in their stock cost. And then on top of that, the average homeowner is worried about whether or not they'll have their job in order to pay their mortgage. They're worried about whether or not they'll be able to pay for their kids' schooling, or if their kid's going to take out ridiculous amounts of loans that's going to put them in debt for the rest of their natural lives. So let's take a quick look at how the market looks. Now, Tesla and Apple did their stock splits, and people drove up the cost of those stocks right before the split, and then they sold off. So basically what this means is even if you've watched some of your money disappear since the highs of Tesla, and Tesla's high was $507, Apple's high was about $136. Even if you watch some of your money disappear, you'll have to remember that over the next year, or possibly the next 2 years, you're going to get your money back, whatever you probably lost. These stocks are not going to stay low because you got to think about it. Tesla is delivering Model Ys. They haven't fully gotten to the swing of Model Ys. Right now, they've been doing a good job with the Model 3, but it's really the Model Y that's going to make them their big money. And then they also have the Cybertruck coming out. And then they also have the new Tesla Model S Plaid mode. And then they also have the new Tesla Model S Roadster. Interest in the company is fine. You don't have to worry about your money in Tesla. However, what you are going to have to worry about is taking temporary losses. So if you've got any margin calls, well, just pay them off. Don't sell the stock. I had a friend who bought Alibaba, and he bought Alibaba at like $86, and it dropped to like $65. And I told him, don't sell the stock. But his mother panicked, and he sold the stock. Right now, Alibaba's riding high at over like $250 or something like that, which I'll get to later. Sometimes you just got to cover your calls, and you just got to grin and bear it. Sometimes you just have to wait. The reality is right now, before I even look at any of these things, the reality you have to remember, we're entering an election season. Right now, we don't know what's going to happen. We don't know if Trump's going to win. We don't know if Biden's going to win. We don't know if there's going to be a freaking civil war based on the results. We don't know much of anything. Investors don't like uncertainty. The market does not like uncertainty. So until the uncertainty ends in November, you can look at historical graphs, and they actually show that September and October are high volatility months, specifically because of election year. We're facing a situation where there's a lot of uncertainty. So Me personally, I don't see I've put as much money into the market as I could get into the market. I've taken money out that I've gained, specifically from all the money I made on Tesla, selling Tesla. But me personally, I don't think I want to invest anything else for September and October. I just don't see myself investing much more money into it. I think if you really do want to do long-term large investments, you're probably better off looking into real estate, like purchasing a second house or possibly a third house. I don't see this market, especially with Trump in office, is a roller coaster. He gets on television, he talks shit, and his shit talking causes market fluctuations. And he knows that, and he's been doing that. The other issue is, obviously, it's an election year and you've got the uncertainty. And I would also say that with the Federal Reserve there, the other problem is that this market is addicted to stimulus checks. When there's no stimulus, the market seems to dip. When there's mention of stimulus and there's talk of stimulus, it starts to go up. Now, I believe that there's definitely a correlation there, but the bottom line is it's like right now is just too volatile. I was finishing up this video because I was interrupted while I was making this video yesterday, September 24th, by a friend who messaged me. And as you know, like, iPhone doesn't allow you to use the voice recorder and talk on the phone. So what ultimately happened was I woke up and I was like, okay, you know what? Let me hurry up and finish this video that I was talking about so that I can publish it. And then sure enough, based on what I was talking about there being volatility in the market, Wall Street Journal put out this article saying that there's definitely going to be a fourth week of declines. I personally believe that, declines are probably going to continue right up until November. The market doesn't like uncertainty. They're talking about the U.S. stock futures falling, so that means that you're going to watch more of your money evaporate. You still own your shares, but you're going to watch a lot of your money evaporate, and nobody likes that. It's not fun. All I can say is that what you need to do is understand that this right here is a teaching tool. Always remember that whatever money you put onto the stock market, make sure that this is a amount of money that you can afford to not have immediate access to, because keep in mind, if you want access to that money, you have to sell the stock. So you have to liquidate your stocks in order to get that money back and make it liquid. So I never go whole hog by putting money whole hog into the stock market. I don't do it. I like to have savings accounts with cash money, and I also like to have a stock market account, in this case TD Ameritrade and E-Trade, with stock invested money. And just in case I ever have to liquidate that money, and you hope that it rises in value before you ever would want to liquidate that money, you always can. And then you also make sure you have beneficiaries signed up, like make sure you have your kids or your wife or whatever it is. Make sure you have your beneficiaries signed up. But basically, all of these articles are basically saying the exact same thing. There's a huge amount of volatility in the market. There's a lot of uncertainty in the market. And that's the ultimate reason why it continues to fluctuate in the way that it does. So yesterday seemed to be an up day, but if they're already talking about futures being low, then that tells you right there that it's going to be it's probably going to be a down day here on Friday. Most of the stock values that I have, because I bought in when they were low, most of them are up. A lot of them have, in some cases, declined by a couple of dollars or a couple of pennies or whatever, but for the most part, they're still up. Electric cars, the biggest hit that I've seen was Nikola Corporation. They've gone from, $90 a share. It was like, they've gone from a high of, $80
all the way back down. And it was crazy because they had a really quick rise due to a lot of people being interested in Tesla. But they're back down to like $20. Workhorse, Candy, they're still relatively cheap. NIO is still relatively cheap. Candy, you can buy a lot of shares of that. It's not very expensive. I've been talking about Candy for a while. And even since, I've talked about it, it's risen considerably, and then it dipped. Like, I think their high, what was it? Their high was $10. So that means that, once we get over this uncertainty, especially considering this is a Chinese automaker and you've got Trump trying to fuck with all these Chinese companies, I think, if you're in it, if you're in these Chinese companies that are making automotives, electric, hybrid cars and whatnot, I think we'll do pretty well with that over time. Now, Nikola, they lost a lot of money, but the bottom line is, as long as you got into Nikola before it started rising, you may have lost money, but you gained more than you lost. So that's the important thing. It's all about buying low, selling high. Let's see. Marijuana, again, most of the stocks in that haven't really moved at all, and they're not going to until we get a Democrat in office that legalizes marijuana. The only thing that moved marijuana before was Barack Obama's presidency. Once Trump got into office, marijuana basically just stopped. It paused. There's very little gains in it, and that's just what it is. Other than that, I don't really think there's too much more. I think it's nice to see that Nike's doing so well. You remember when all of those racists were protesting against Kaepernick and they were claiming that they were going to ban Nike? Yeah, well, that didn't go so well. Nike went from $70 all the way up to $124. So that just tells you right there that the corporations don't give a damn about you or your dime because they know where their money is. And then there's Boeing. Boeing is sinking like a stone, but that's to be expected. Boeing is military-industrial complex. Boeing makes planes. Boeing makes plane parts. They're probably not going to go bankrupt, but the thing about it is it's right now, it's kind of an unsafe buy. But then again, in March, their low was like $95. If Boeing goes below $100 again, I'm pretty sure that's going to force the government to do something. But these are all my airline stocks. I bought into those when they were in the March lows, and the thing about it is they're not going to recover until planes start flying again. Back in March, I couldn't have anticipated that this lockdown was going to last this long, but now I'm believing it could last as long as another year. The government is going to do what they can to make sure that the airlines don't go out of business because they know they need them. But every country is going to have to do its part to help their airlines. So that's going to be a problem. Cruise lines are also considerably down. Cruise lines have value, just like the airlines do, but, for the time being, they're not coming back. And as long as the airlines and the cruise lines are down, it also means that gas costs are going to be down, which means that oil company shares are also going to be down. If you're buying into oil and energy right now, oh yeah, you're going to be happy later on, but it's going to take time. It's just like this oil company, TTI. Their shares are up from the March low, and some people bought into that, and they've definitely seen an increase in their value since March. So once this economy is finally able to recover, which we have no idea how long that's going to cost, any energy stock money that you've spent, you will earn that back. The problem is, nobody wants to wait. Everybody wants to make their money as quickly as possible. Everybody wants the get-rich-quick scheme, and ultimately the market's not moving like that. The market moves like a battleship. It moves really slow. It turns very slow. There can be very sharp decreases, but for the most part, it doesn't move as quickly as you want it to. The banks are up. The technology seems to be up in most cases, or at least the ones that I own. Electric charging system companies like Plug, BL&K, and Spartan. I mean, they're all doing decently. I've noticed Zoom Video has these crazy increases and falls. Like, they go up to, $531, then they drop back down, then they go back up. So, a lot of that is because, people are using Zoom video, signing on to Zoom video with memberships and everything. And for the foreseeable future, these tech stocks that have to do with distance learning and distance meetings and everything, oh yeah, they're up. But yeah, it's a very uncertain future. And again, right now, like, I hate to say this, but you're going to do whatever you want to do with your money. But right now, I personally am not putting any more money into the stock market that I haven't already put in. Until November is over and we know who the new president is, I just can't see doing it now, because the roller coaster is just the drops are just too sharp, and that's just what it is. You're on a roller coaster. So my thing is, I'm going to wait until after the election to decide who I'm going to, well, first of all, we'll see who's the new president, and then I'll see who I want to invest in. And I hope to God it's Joe Biden, because I know the Democrats are going to force him to legalize marijuana. And if they do that, I'll be rich. I'll just say it just like that. Most people would never say something like that. But based on the holdings I have with marijuana and biotech, if they legalize marijuana and these companies are allowed to thrive the way they always should have been, oh man, I'm going to be rich. And I know a lot of people don't even want to hear that. Like, there's a lot of these goddamn Republicans, especially these racist ones. And for me to say something like that, I know these motherfuckers don't want to hear that shit. But I'll say it like this: all they got to do is legalize marijuana, and I'm be very, very, very happy. And I would also say that investing in these like, for instance, there's one company I can tell you about right now, Square. Square, it has been going up relatively steadily because Square deals in distance paying. So that they're trying to be a cashless society. You may have heard about the fact that the U.S. Mint was closed to the point where they weren't printing more change and coins, right? In the future, you're probably going to see a lot of the places that accept change and coins. They're probably going to move to some type of pay with your phone system or pay with electronic transfer system. They're going to have near field communications. Square has been going up. And, I'll say that in the future, especially with this coronavirus can be, transmitted with cash, a lot of businesses have been fighting to make sure they have Apple Pay, Google Pay. That's one place you might want to consider looking into. But right now, investing in it is difficult because it's more expensive. I think it's like, what is it, like $150 or something a share? Yeah, it's $152. But it has been steadily, if you look at it over a year, it's been steadily rising. If you look at it over 2 years, it's nothing but up. You can see that. So payment systems that are popular are also worth getting into. Anything that you think coronavirus has increased the importance of, those are things that you should consider if you have not already considered them. So, yeah, definitely look into that.